The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Adam Dodds. Adam is the founder and CEO of Freetrade, a free stock trading app and part of the trend toward intuitive, low-cost retail investment solutions. This is an interesting discussion around providing value to customers and what that means, especially in complex industries like investments. This episode feels less like a standalone conversation and more like another installment in an ongoing exploration of how technology can be used to optimize retail investor behavior, decision-making, and ultimately long-term outcomes. Please share your thoughts on the subject with us on Twitter @Rebank Podcast. If you have ideas for who else we should be engaging with to investigate this theme, please let us know. Thank you very much for joining us today. Please welcome Adam Dodds. Adam Dodds, welcome to Rebank.
Hey, Will, thanks for having me.
Yes, it's good to catch up again. We were kind of reminiscing on the last time we connected, which was on a bus outside of Barcelona.
We were going over the mountains on the other side of Catalonia, I think, right?
Yeah. Great times. And it was a while ago, and you guys have made amazing progress since then.
Yeah, I think at that point we still didn't have the product live, did we? And now we're about 4 months into our rollout, having just launched on iOS in October, and Android's coming up next month. We're looking at a full launch probably sometime in April.
Wow. So, all right, for people's reference, Freetrade.
What's Freetrade? Freetrade is a mobile app that allows you to invest in stocks and exchange traded funds without having to pay any sort of fees or commissions.
So it's the, modern iteration of like an E-Trade or something that was, 20 years ago kind of.
Yeah, exactly. I remember I placed my first trade using an online discount broker in the late 90s. That was kind of revolutionary at the time. You didn't have to call up a stockbroker and pay £100 for a trade. We're just kind of taking it to the next level, online broker 2.0, if you will, mobile focused, and dropping those commissions to zero.
Yeah. Well, that's awesome, and want to get into a few different points around that and the early evolution of that vertical within fintech, if we can call it that, and also want to discuss, I guess, some of the kind of like higher level, like more, philosophical, if you will, like customer behavior type points around, what has or hasn't been working for retail investing in the past, where propositions like Freetrade kind of fit into the solution. And if you're, if we're sitting here looking at the existing kind of retail investments marketplace, what should continue to evolve to continue to kind of like add value to customers?
Yeah, I mean, that's kind of the origin story of Freetrade, where I came over I'm Canadian, but came over to London 4 years ago, something like that, and there was nothing out here that I was really attracted to it from a product point of view, and I found everything to be really expensive. To invest in passive ETFs is what I wanted to do. If you're like I was, making a okay salary, but maybe I would only have 100, 200 pounds at the end of the month to put into to top up my investment account. £12 commissions are really expensive, and they bite into really your ability to invest the way that you want. So that's kind of why I started Freetrade, to eliminate those kind of barriers, both the cost and also the complication of the existing products, so that myself, my little sisters, my friends wouldn't find investing intimidating. They would put their cash into something where they could grow their portfolio or grow their wealth, rather than let it just kind of sit in a bank account and increase at a lower rate than inflation.
Yeah. So, I mean, if you kind of like look across the market, they're kind of the full service, like discretionary managers, who you're, I don't know, giving your cash to. Generally, they won't really look at you these days if you have less than like 250K of net assets. And, if you start talking about like, high net worth family office stuff, like the numbers kind of rise exponentially. Then there are, some like execution only type platforms in the UK, the likes of Hargreaves Lansdown, which has been a phenomenal success story over the past couple decades, I guess. Through to robo-advisors, so like the Nutmegs and the Scalable Capitals in Europe, the Betterments and Wealthfronts in the US, and then the kind of like single name stock trading apps, the eToros and Robinhoods of the world. And I guess Freetrade would be a UK incarnation to an extent of that. So retail investors have a number of options. How do you think about the right sort of customer for Freetrade versus the right sort of customer for other types of providers?
Yeah, that's a good question, because there's sort of two buckets I would put kind of investment / trading apps into, and you touched on one of them, Hargreaves Lansdown. So they're a FTSE 100 company, 9 billion market cap. So you're right, they're super successful, million customers. And they're set up for people that want to build a portfolio for a long period of time, over time. They have great customer retention, kind of like a bank. And that's where we see ourselves very similar to, but for a different generation. So Hargreaves Lansdown's average customer is like 50 plus. They do a great job of producing content aimed at that market. They do a great job of producing a product and customer service aimed at that kind of a demographic. However, our demographic, the first 10,000 customers, if you looked at kind of a graph or a histogram of their ages, it really peaks at about 27. So 18 to 40 is where everybody is. And our average age is 30. So 30 versus 55. It really is a generational change. And that's how we've approached the product. So same kind of long-term outlook in our customers, but a product designed for them. And price does play a factor in that, because if you wanted to go with Hargreaves, it would be £12 to buy an ETF. And if I have £200, again, as I was saying, that really doesn't make any economic sense. So we're cutting the cost there. Just to kind of close that off, this kind of the second bucket that you mentioned was like the eToros, the Robinhood, kind of day trading apps. And we're definitely not a day trading app, and we're not set up for that. We're not designing our business model for that.
So for the kind of ignorant, outsider, me in this case, what makes you not a day trading app, whereas those apps are?
So I think it really goes to how you design the product. So if you're a trader, whether you say a day trader or not, but if you're looking to buy something, sell it, make a profit in a short period of time, what you're looking for in a product is very different than someone that wants to buy something and then not sell it for another couple of years maybe, or hold it for potentially forever. So just like a simple thing would be, when you get into the app, what are you being highlighted? Are you being highlighted like what the change in the value in the last day has been, and what your profit and loss is on a position, and your opening and closing positions and instruments and all this kind of jargon that is an artificial barrier to most people for investing? And that's the way that the industry here in the UK, the stock trading industry, it was really the CFD and the spread betting industry, has built their product. It's more like a gambling product, trying to get people in and out of trades and make money off of volume and flow.
So I think this kind of gets to an important point, which you mentioned earlier on, which is the way that you make money, and the subscription model that you're in the process of rolling out, and your thoughts about alignment of interest.
Yeah, because so everybody in the industry, in the terms of the stock trading or day trading or CFD industry, what they're after is to get their customers to trade as often and as much as possible, because they make money off of volume and commissions, right? So I want you to trade 10 times a month or 20 times a month. That's good for me. However, if you're looking at it from your customer's point of view, that's the absolute worst thing that your customer could be doing. Excess portfolio churn is just like a guaranteed way to bring down your returns over the long term. And that's why all these CFD and websites, if you go on their websites, at the bottom, the FCA is making them say 80% of people that use this product lose money. That's regardless of whether it's in a bull market or a bear market. They just lose money because it's kind of like a gambling product. So how do we change our incentive? Well, we're eliminating commissions, and what we want to do is have a freemium model where our users can go download the app, sign up, and they can have a free account, and they can start placing trades and investing for free without any commissions or fees. However, we are going to and do offer already one account type, and we're going to offer more, where you pay a monthly subscription, and that's our kind of premium side of the freemium, and you pay whether it's a £5 or a £7 a month fee to Freetrade, and you know what you're paying for. You know where we're making our money. We're being transparent with you, and we don't have any sort of perverse incentives on the back end that's not aligned with your interest.
Robinhood, for example, has come under a lot of pressure lately around effectively their kind of fundamentally their business model, like the way they generate revenue. And there was an important kind of court ruling recently around a TD Ameritrade case, which is kind of moving in the U.S. toward putting a lot more rigor, it sounds like, around this concept of payment for order flow. So simplistically, the way Robinhood makes money is that they sell their order flow to brokers who pay them for the ability to execute their trades. So the brokers get to make money, and Robinhood gets a revenue channel, hence they can offer free trading to their customers. That's the US model. The UK model, as I understand it from you, is quite different. Would you like to discuss that at all?
Yeah, so first off, what is payment for order flow? What is order flow? As you said, that's directing your client's trades to a certain venue, because what a lot of people don't understand is not all trades go through a regulated, recognized stock exchange anymore. There's a cornucopia of different ways you can execute trades, different venues. And what Robinhood does and other brokers do is they direct it to other liquidity providers, aka market makers, and those market makers, they make money off of the spread between the bid and ask. And Robinhood is getting paid by them because, so essentially to get a piece of that spread. Conceptually, well, why would they be paying for that, right? Why is Robinhood accepting revenue for that when they should be looking out for the best interests of their customers? So if Robinhood is getting paid something out of that spread, couldn't they be getting a better price for their customer instead? Of course they could. And that's the controversy, and that's why TD's getting a class action lawsuit as well, because they're not actually looking out for the best interests in their customers. Over here, the FCA, credit to them, takes a pretty strong line on this stuff, and you are not allowed to do that because it's not in the best interest of your customers. It doesn't satisfy the FCA's definition of best execution. So simple answer is, yeah, you're just not allowed to do that in Europe, definitely not in the UK. And I would not be surprised if we see a change in view over in the States from the FINRA and SEC or whoever.
So I guess just for the kind of context of the audience, your guys' revenue streams are, would you like to enumerate them for us?
Yeah, well, we don't charge anything for basic trades. We will be adding different types of trades. Right now, we just got kind of basic and then instant, but we'll be looking at kind of limit orders and that kind of stuff. And we'll charge for kind of premium trades, if you will. We charge for certain account types as well. So a very typical freemium model in the software industry, right? You start with your free plan and then you can upgrade to different premium plans. The first account type that we're offering right now is an ISA account. That's £3 a month. We're going to be adding...
Which is a UK tax.
Yeah. It's like a tax-free account, tax-wrapped account, so you don't have to pay any capital gains on that. Then we're going to add a SIP, which is a self-invested pension plan. That'll carry a monthly charge as well. And then,
is that because there are administrative costs to you of running that?
Yeah, there are, but also with freemium model, like just we're transparent about it. Like if you're having a free account with Freetrade and you're only placing free type orders, yeah, we're not making any money off of you.
And you're losing money.
And we're losing money. We don't lose a lot, but we do. And our whole business model is predicated on people paying for value-add services and building a product that's good enough that people are happy to pay for.
Yeah.
And then the last account type that we're rolling out in the spring, it's called Alpha, and that's just going to give you everything for one low monthly fee. So you know what you're paying for, and you can trust that Freetrade is not fleecing you on anything else.
Yeah. So I think there are a couple other pieces I want to pick up around the business, which are particularly interesting. One is the way that you guys have funded yourselves to date. So haven't raised any venture capital. It's all been equity crowdfunding, right?
Yeah, it was a funny thing because I think Americans don't really get it because they think crowdfunding and then they think of Kickstarter or GoFundMe, like some kind of charity thing. But there's a real crowdfunding culture in London and in the UK, a little bit in Europe now too. That Crowdcube is where we did it, and they've been around for a while now, and they're actually, I think, the number one funder of private businesses in the UK in the last year. So it's really starting to take off. And I think at the beginning of this journey, I didn't think that at this point we would still could say that we were 100% crowdfunded. I thought we raised our very first little tiny kind of like pre-seed £150,000 on Crowdcube.
Which is a lot, like for a pre-revenue like project, right?
Yeah. But I mean, just to put it in context, so we're a regulated financial institution. That takes some money to build. So what we raised in that initial amount was never going to carry us all the way through. It was just to kind of get us started. But it was so successful. No one knew about us, and we managed to do it in, I think, 10 days, 100 and somewhat 170 investors, something like that. And then we had this wait list going. So with those 170,000 people, started referring other people. And by the time we finished this accelerator program, that would have been... like 6 months later, all of a sudden we have 4,500 people on a wait list, and people were asking to invest in Freetrade again. So we were like, well, maybe we don't need to go raise some angel money or some seed VC money. Let's go back on crowdfunding. And we were like blown away by the demand. So we raised £1 million in a week the next time, which was way faster and a bit more money than we were expecting too. We just had to cut it off because the valuation wasn't that high. Otherwise we'd sell the whole company. So yeah, that gave us £1 million, and we were 3 people at that point. So we're like, okay, well let's build this financial institution. We're planning and not go kind of like the quickest to market route. And we went and got authorized, and we built a team around that. Before doing another crowdfunding just before our launch, which we completed in the summertime, that was £3 million from 3,000 investors in one day. And at that point, we had 35,000 people on a wait list. And a lot of people were like, yeah, is this wait list real? Or I don't know. And the crowdfunding was actually in private mode for the first 24 hours. So like we were basically funded just from our wait list. 3 million in like one day. So it was pretty awesome.
Wow. I guess it helps to be an investing app, right?
Yeah, I know. I think that's part of the secret, right? Because everybody that does crowdfunding is already, by definition, an investor. And who's going to put money into a private business if they've never bought a stock before? And if you bought a stock in the UK, you understand the pain point we're solving. So there was some nice synergies, or whatever you want to call there. Yeah.
And one of the things that jumps out is that you, because as an FCA regulated broker, right? I mean, you have a minimum capital requirement.
Yeah, we do.
Like £700,000 or something.
No, well, actually, the minimum capital requirement for our business right now is 125,000 euros, which is just a minimum amount. We actually have a higher amount because I won't bore you with what an ICAP is, but the calculation.
Oh, I know it well.
Okay, yeah, right. You're coming from banking world. I forgot.
In fact, I wrote one recently.
Yeah, our next kind of level up, which we're actually in process right now of getting the authorization for, will increase our capital requirements there. But again, our real minimum ones is above that, like, true minimum threshold set by the regulator. So yeah, there is a regulatory cap thing, but it's not like banking, right? We're not taking balance sheet risks, significant balance sheet risks.
No. But the concept of having crowdfunded your reg cap is like just a great concept. Yeah, it's
kind of cool, right?
So one of the things I wanted to dig into was the kind of the topic of education, right? So we're talking about retail investors, and I think you kind of mentioned some of the kind of free stock trading heritage, which is more around, spread betting, contracts for differences, which is very much not the market that you're targeting. But traditionally, whether it's people saving through execution-only online platforms, stock trading apps, education is a challenge, right? It's like, how do you get people not to buy high and sell low, freak out when markets start to kind of shake up a bit? How do you incentivize people for long-term sustainable wealth building? I'd be curious to hear your thoughts early on as you kind of set out on this journey. How you think you can add most value to your customers?
Yeah, that's a really deep question. We're starting from the point of being an execution-only stockbroker, so we're enabling people to invest the way that they want without providing any sort of guidance or any kind of education. Will that be the case forever? No. But the people that are most excited about free trade in terms of like the early adopters are definitely people that already have some basic investment ideas and are aware of the concept of passive investing in ETFs and understand that there's no reason to pay 1% to a robo-advisor to buy a bunch of iShares ETFs when you can just do it yourself if there were no commissions. Over time, though, definitely there are people who, hey, I just bought Apple. That's awesome. I've never owned a stock before. This is like a watershed moment in my life. But what do I do next? How do I go from having a couple ETFs to something that's a little bit more robust and diversified in terms of portfolio? And these are the kind of tools that we're focusing on. And those are the kind of tools that we're going to be rolling out. And if someone is trading too much, we have no problem like displaying that information. We're not going to tell them, no, you can't do that, but we want to give them the information and make sure that they're making informed decisions.
Yeah. I mean, I think the opportunities that you guys potentially have to enhance and expand the product over time, it's everything from, you could build like diversified ETF portfolios that can be exchange traded, quote unquote, in the same way that the single shares and ETFs that you're currently offering can be. You could show performance against what a diversified portfolio would look like, and effectively challenge people to either like consistently on a risk adjusted basis hit that, or allow them an easy way to swap into a some sort of better balanced portfolio. There's I think there are lots of lessons to be taught on.
Because you think about what robo-advisors are. All they're doing is they've got an algorithm and a basket of passive ETFs. That's almost every single robo-advisor. We will be having those kind of tools available in our product as well. You could set up automated investing rules. You could set up maybe half of your direct debit for the month just automatically goes into a pre-selected basket of ETFs. All that stuff is all pretty simple to release on top of the kind of core brokerage platform that we've built.
And I think it's worth mentioning that core brokerage platform that you referred to. So I think you're kind of plugged in basically as deeply into the kind of clearing and exchange stack, so to speak, as possible. Do you want to?
Yeah, so I think if you were to look at, say, robo-advisors or some of these other brokerage apps, they're just a layer on top of a bunch of other layers. Maybe a nice UX presented nicely, but there are costs associated with that, and everybody wants a bit of a piece, if you will. And we've looked at that and said, well, we can't really provide the pricing that we want to provide if we're going to be paying A, B, and C to these intermediaries. So we went right back to the piping, the plumbing of the financial system here in the UK. So we're a member of the London Stock Exchange. That's where all our clients' orders go right now. We're a member of Euroclear. It's a clearinghouse over here in Europe that also owns the Central Securities Depository, CREST, here in the UK, and we're members there too. So you can't go any deeper. And that kind of is part of the reason that we're able to do this, because you look at any of the incumbent brokers, like these guys are charging £10, let's say, for a trade. None of them are paying anything anywhere close. It's pence. All the costs baked in. So there's no reason why it has to be at the pricing that it is now.
Wow. Firstly, quick compliment. Even so, given the deep connectivity that you guys have with kind of the incumbent networks, all the more impressive that you've done it on crowdfunding, right? I mean, very cool.
Yeah, I mean, you just need cash. Cash is cash. But the benefit of crowdfunding, because there's always people that say, it's crowdfunding, dumb money, people don't know what they're doing. And it's like, well, there's a little bit of an element of that. Maybe they're not as sophisticated as an institutional investor, but they're also our community, and that's how we have such a large community and already like a huge waiting list. And we have, we're only a few months in and we already have 15,000 customers. And that's just on iOS. We have over 10,000 people just like sitting with a waitlist app on Android waiting for us to press the button. And then we have a really long wait list still that we haven't given access to yet as we're scaling our business. Because, as a financial institution, there's a lot of other things beyond just the technology working flawlessly. So we need to make sure our compliance procedures are scaling along with our customer numbers. We need to make sure that we are still giving excellent customer service as we scale our customer numbers, all these different pieces. So we're growing pretty rapidly, but we are also controlling that growth to make sure we're doing everything right and we don't have any kind of screw-ups along the way.
Well, excellent. It's clearly super exciting times for you guys and massive runway, I think, ahead. It'll be fun to stay in touch.Maybe we'll revisit this at some point.
Yeah, I think so. I hope this time next year, we'll be looking at the customer numbers and it'll be something like, oh, wow, you have 1 million customers already? Totally achievable.
Excellent. Yeah. Adam, how can people find out more about Freetrade and join your waiting list?
Yeah, well, you can go to our website, freetrade.io, or you could just go in the Play Store or the App Store and download it. We have a very active community. You can click on that on our homepage and get in the discussions. Some really interesting stuff going on there. And very similar to, maybe like the Reddit threads and whatever, but it's a little just a bit more focused on UK investing for people kind of like under the age of 40 or so. Mm-hmm. So yeah, that's where I'd start. Of course, we're on social media and stuff too. So at Freetrade on Twitter.
Excellent. Adam Dodds, thank you very much for joining us today.
Cool. Thanks a lot, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.